Thank you very much. We're back talking directly about China again, and the subject is very sadly decoupling from my point of view, which is, I see as part of a sort of larger picture of deglobalization. I'm going to start by telling you about going to the Morgan Stanley Beijing China conference a few years ago. And we were talking about decoupling then, which was in its early stages. And I think I'm going to start with you, Steve, and ask you whether you think decoupling was inevitable. And I'll tell you why I'm asking that. It has now been 22 years since China joined the World Trade Organization. And people in the West don't realize that while many people are wringing their hands over why did we let China into the World Trade Organization, and was that the beginning of the end, there was a similar debate in China. And that's because for the 50 years since the Communist Party came into power in 1949 to China's joining the World Trade Organization, there was a debate in China. No one helped us for 50 years, except for a nanosecond when we got aid from Russia. We had to rely on ourselves. If we join the World Trade Organization, can we trust the world to sell us everything from soybeans to semiconductors? From the Chinese point of view, it's the US that broke the faith, whereas from the point of view of the West, it was China took advantage of us. So let me ask you, Steve, was decoupling inevitable? And if so, why?
Well, I'm going to answer your question, but I'm going to say one thing first, Henny. The view in Washington is, of course, that America is not decoupling with China, that we are de-risking. Don't believe this for a second. This is classic political speak coming out of Washington, aimed at obfuscating what is a politically expedient trend toward decoupling. So was it inevitable? Was Donald Trump inevitable? It's the same question. To me, the idea that we're driving a wedge between what used to be America's largest trading partner and our domestic economy is traceable to the politically expedient China bashing, which is very much evident today, which in the last 5.5 years has led to a trade war, to a tech war, and now to the early stages of a new Cold War. The final thing I'll say is that the tariffs that were put in place by Donald Trump in 2018 and 2019, and in the early months of 2020, are still in place today under Joe Biden. He had every opportunity when he entered into office, and when on the first day he signed 14 executive orders to repeal some of the most outrageous policies of the Trump administration, like the border wall in Mexico, the Muslim travel ban, and the like. He could have rolled back the tariffs on China, but he chose not to. And so as of today, we still have tariffs on about $335 billion of Chinese exports into the US. The average tariff rate on Chinese products going into the US is 19.2%, which is over 6 times what it was prior to the onset of the trade war. These policies are still in place today, and it's politically driven by Trump and by Biden, and our failure to address this and now substitute this political speak called de-risking will keep the decoupling trend very much in place.
Thank you. Steve, I'm going to turn to you. Australia has been through various iterations in its relationship with China. It's on the upswing now. To what extent does Australia align with the US? To what extent does it seek to have a less extreme view, maybe? I don't know if I'm using that, if I want that adjective, but I'll turn it over to you.
Sure. So I want to pick up on a point that Mohammed Al-Aldrin made this morning when he said that economic security, economic growth has gone from being at the front of the bus to being further back on the bus. And what's now in the front seat is national security. There can be no doubt that there is an economic decoupling happening. There is a deliberate policy intent on the behalf of Western governments, whether they're Australia, Canada, US, UK, indeed a number of European countries, to make sure that national security is front and centre when it comes to assessments around, for example, FDI inflows, when it comes to assessments around who's owning critical infrastructure. And that goes all the way back through to beneficial ownership and the way in which you build your capital stack around that investment itself. So to go directly to your question about Australia's position, I think Australia's position is very much aligned with the UK, with the US, with Canada, all of whom are moving in lockstep in a very significant manner to exert as much pushback on what has been, I would argue, a change of position from the Chinese. I mean, if you look at the fact that the relationship has thawed, to use the most common phrase in relation to the bilateral relationship between China and Australia, that hasn't happened because of a change in policy on Australia's part. It's happened because China has taken a decision that the economic coercion that they were engaged with wasn't working, and there was a ripple that was flowing across into a number of other economies as well. And recognising that, they then took the decision to say we should have a thawing of the relationship. So ultimately what that means is it's an analysis that Xi is making in China about China's standing globally and a constant calibration about the way in which they project China to the world.
So I've just come back from a week in Japan, and one of the things that struck me is that the Japanese government and Japanese companies are not on the same page. The Japanese companies say to the Japanese government, where do we find the economies of scale of production and the scale of the market that we have in China? And the Japanese government says, okay, so maybe China plus one. It's not clear who that one should be. Charles, in the US, are corporations and investors on the same page as the US government, or no?
I think it really varies, by sector and by company. Apple and Tesla are investing a lot more in China. And then you have other companies that are in the process of diversifying their supply chains out of China. So it's a really mixed bag. I think that I agree, by the way, with both the comments that decoupling is a political and geopolitical process being driven by the United States government and many of our allies to weaken China, to contain China, both economically, technologically, and geographically. So I would say that from here, regardless of what a few U.S. companies who are so heavily invested in China, they have to be there, they have to invest more. The trend from here will continue to be de-risking, which I agree with Stephen is just a euphemism for decoupling. Diversification of supply chain is a euphemism for how can we kind of pull out of China without pissing off the CCP. The American companies, and many of them are some of the biggest U.S. multinationals or clients of ours, are so concerned about China and what the government is doing there that the two questions I get the most from the C-suites of our companies are, first, I'm a CEO, can I actually go to China without getting arrested? which is increasingly becoming an issue. And secondly, is China uninvestable, which I find an absolutely staggering question as someone who spent 27 years on the sell side, taking clients to China, taking companies public, Chinese companies public in New York and London. It's a complete 180. But the truth is, the CCP continues to crack down on their own companies. I always say the CCP's actually inflicted more value destruction on their own companies and their economy than the United States Congress ever could. So they continue to crack down. Now it's the medical companies. They're raiding U.S. Consulting companies. They're arresting foreign executives. We're going to see that they're restricting, increasingly restricting the release of macroeconomic data. Never a good sign when a country does that. FDI has not returned to China post-reopening, post-COVID reopening. Also to your question, every one of our clients, whether it's a multinational or a buy-side client that has been to China in the last 3 or 4 months, has gone hoping to be more constructive, seeing what's on the ground. Every one of them have come back more negative on China. So for me, in the short term, and it was discussed earlier this morning, China can surprise all of us on the upside with, some more stimulus. They can create a stabilization fund for the equity market. They can try to, address their bad debt problem through bad banks, et cetera. But the truth, so the short term, there may be some good news. Biden and Xi will meet. That's helpful. But the truth is, medium to long term, China is the biggest structural short in my career. I think we saw peak Chinese economic power, peak economic China power pre-COVID. And from here, it's a literally multi-decade structural decline with a lot of value destruction, trillions of dollars of value destruction.
Wow. Thank you. Just before we started the day, I was talking to Steve, and we were talking about the fact that China didn't used to be a monolith, but under Xi Jinping, it has become so. Can you talk about whether this path is precisely because of Xi, and when that inevitability happened? Was it for many of my friends who are China investors who are mainlanders, when he abolished the 2-term limit, that was the beginning of the end. That China was a monolith going down the wrong path. How do you see it, Steve?
Well, it's tempting to always single out an issue, a company, or a person to blame difficult economic circumstances on a simple explanation. I think in the case of China, Xi Jinping has been the accelerant, the catalyst in what we can now look at as being something that is close to have been inevitable. The main driver of the stagnation, the coming stagnation of China relative to the hypergrowth we've experienced is demography. And we saw this in Japan when the working age population peaked in the mid-'80s, and we're seeing it now in China when the working age population peaked about 5 years ago. We've always, in economics, we learn that the only way you can ever offset declining working age population is to increase the productivity growth of the economy. You get more output out of a declining input. And that's the problem for China, is that they have reacted exactly the opposite to what a shrinking working age population needs. Under Xi Jinping, and this is where it does get personal, the pendulum of economic power has shifted back to low productivity state-owned enterprises. Secondly, under Xi Jinping, pressures have been brought to bear on the once dynamic private sector, especially the internet platform companies. China will tell you that phenomena, the second one, on the internet companies is over. I don't believe that. They're still, to this day, putting pressure on this sector. So with the population declining and the productivity offset working the other way, China's in a very tough place. As I said, though, in answer to your question, Xi Jinping did not set in motion a process that began really with the unsustainable one-child policy under Mao and Deng Xiaoping. That was pretty much in the cards, and now we're seeing the full ramifications of that.
Charles, I'm going to turn back to you, picking up on Steve's point. You know, for a long time, we had seen privately owned enterprises accounting for a growing proportion of GDP, and now it's swung back to state-owned enterprises, which have a far lower return on capital, a far lower return on assets. It seems to me that everything Xi Jinping has done post-COVID has been the wrong things to do, that you have insufficient household demand, yet all the reforms have been on the supply side, which just increases that imbalance. If, miraculously, he was to turn to you and say, what should we be doing? To Steve's point about shrinking population and the obviously negative impact today of the one-child policy, what would you suggest?
Yeah, look, I think there's a lot of things that they could do. The problem is that what we're seeing play out in China is what we've seen throughout modern history, which is that a military dictatorship over time is, or to put the other way, actually, an open capitalist economy over time is inconsistent with a military dictatorship, because over time, in order to exert more and more control, or in this case, stay in power, that government needs to control two things: information, data, which is why they've cracked down on all of their data companies, well beyond the tech companies. They've gone after the ride-hailing companies, the medical companies, you name it, education, online education companies. They need to control information, and will only become more repressive and more controlling that way. I also would just add quickly that when you're a country that disappears some of your most successful entrepreneurs and billionaires, it's also not a great sign, and doesn't create really the most welcoming environment for foreign investment, frankly, let alone domestic investment. Secondly, as a government, you cannot lose control of your currency. And I think that's the other issue that's a threat to China, and another reason that we're only going to see the CCP continue to exert more and more control over their economy in ways that are somewhat hostile to foreign investment. And so I don't have great policy. You know, my policy responses for the Chinese government is go back to where you were when you first started opening in the late 70s into the early 80s, and actually, again, welcome foreign investment with an environment that is where your economy is liberalizing and opening, not going the other direction. But one other quick thing, if I can, just to say that the two greatest sources of tension, because this is one of the issues that the CCP is grappling with, but the two greatest sources of tension between the U.S. and China going forward are only going to get worse, right? The first is the tech export restriction list by the United States. We're adding more technologies to that. We'll keep adding. We've gotten the Dutch to join us on the semiconductor restriction list. The South Koreans will probably join us. So that only will create more and more tension between U.S.-China. The second area of tension is Taiwan, right? And we have to talk about Taiwan. I said this at the AIM summit back in April in London. The United States will absolutely go to war over that island. Let's just be very clear about that. I think people completely misread the Biden administration on that very important issue. So for me, the best case scenario for China is more decoupling. The worst case is we go to war. I don't see how any of that, combined with what the CCP is doing, creates any kind of environment that is friendly and welcoming to foreign investment. I would argue it's an increasingly hostile environment. So I don't have great prescriptions for them. They need to open up their economy and go back to where they were pre-President Xi.
Which seems unlikely.
Very unlikely.
I'll come back to Taiwan at the end. Yep. But first, I want to turn back to you, Steve. we see a world collectively of slower growth as the shift is ever more toward security rather than efficiency, et cetera, and efforts to weaken China, which is seen to be a competitive threat on so many fronts. Is a very weak China in the best interest of the world, do you think? What are the costs?
So, Penny, I would pick up one aspect about your question and even Charles's comments earlier, which is that I genuinely don't believe that the Western allies, for lack of a better term, are focused on weakening China. I think that what's actually happening is that you have now almost an axis of sorts of Iran, China, North Korea, who are working in a way to destabilize the existing global order. And they'll have their reasons why they want to do that, but there's no doubt that the international rules-based order, as it has existed since effectively the Second World War, is under more pressure now than it's ever been. And you see it on multiple fronts. You see it with the United Nations, you see it with the World Trade Organization, you see it with a whole raft of different multilateral institutions. So in the face of that pressure being driven by a number of different actors from a number of different quarters, you are having pushback from the US, from Europe, Australia, Canada and others. And that pushback, I think, is sometimes misinterpreted as being an attempt to constrain China. I don't think that's what it is. I think it's a more assertive posture from the West, predominantly driven by the need to very quickly see a stiffening of the spine off the back of Russia's invasion into the Ukraine, which is now driving this view, look, we tried to accommodate this more pluralistic view for quite some time. We're now no longer going to do that. So I think that's the intent that sits behind the policy, and that's what's driving a lot of the engagement internationally at the moment. But the fundamental issue around China's growth and economic growth, and obviously Charles is extremely bearish on China, is that ultimately, I would argue, the policies that have set China to be an engine of growth for the best part of 2 decades are no longer the policies that China embraces. And so you are getting a more centrist government, a more state-owned enterprise focused government that's now driving a slew of policies that frankly are very different to the policies of 2 decades ago, and policies which at the time many of the Western countries were trying to support as much as possible, perhaps in the misguided belief that by supporting those policies, we would see an opening up of China beyond just economic, but to also be political as well.
Henny, can I respond to that?
Please.
Steve, we share the same name, but we don't share the same view. I will take exception with the point you just made that the U.S. does not want to contain China. I think we very much want to contain China because we are not strong enough to maintain our own position as the world's dominant economy. How can I say this? I look at our domestic savings rate in the United States, which in the first half of this year was slightly negative. The world's leading economy in the world and this is a domestic savings rate net of depreciation that goes to replace our worn out capital stock, running a negative net national savings rate. Historically, in the last 4 decades of the 20th century, the number wasn't negative, it was a positive 7.5%. Lacking in saving and wanting to grow and invest, we have to borrow surplus savings from abroad, from places like China, and we run massive balance of payments and multilateral trade deficits to attract the foreign capital. Last year, we ran merchandise trade deficits with 106 countries. China's the biggest, but its share is getting smaller because of the Trump-Biden tariffs. But because our savings is getting lower, the Chinese piece just gets diverted to other countries, and our multilateral trade deficit continues to expand and grow. So we're making a major policy mistake right now by squeezing our low-cost producer, and we're pushing our trade elsewhere to higher-cost producers, which, by the way, adds to what I think will be a sticky inflation problem. So we're uncomfortable with China, in large part because we're uncomfortable with our own position as the world's dominant economy. And until or unless we fix our savings problem, and our budget deficits suggest that we're going the other way, this is going to go from bad to worst. National security is a foil to deflect attention away from our deeper and more worrisome long-term saving and other structural problems in the United States.
You know, our time is, I just see they've reset the clock. So we have a lot more time.
Yeah, we have to talk about Taiwan.
Which is a wonderful thing. We'll come back to Taiwan, but I want to pick up on Steve's point. You know, I had my hand up when Mohammed was speaking, and the question I wanted to ask him was, is the Fed going to lose control of interest rates in the States? If you look at how China has cut back investing in US Treasuries and is buying gold, if you look at the Saudis saying what the US did to Russia by seizing $300 billion, they could do to us. Japan at the peak was 1.3 trillion in US Treasuries. They've cut that by a third. And when they go to positive interest rates, and they're very close to that now, then we see a lot of Japanese money leaving the US Treasury market and going back into their own market. A lot less liquidity in the world soon, right? To what extent, you know, is it going to get a lot worse? Is the US dollar, what is the trajectory of the US dollar? Charles, I'm going to ask you that.
Yeah, look, I think, and it's Mohammed earlier, who's one of the best, I'd argue, on the planet at analyzing not only US monetary policy, global monetary policy, and the US economy, has said it very well. We have very big structural problems in the United States, many structural problems, some of which you just laid out. But what's really interesting is because of geopolitics and because of national security, which is a word that, you know, a phrase that keeps getting mentioned increasingly, not only here, but at every conference I speak at. You know, I've always said that, to answer your question, I've always said, you know, the single biggest change since the invasion of Ukraine for the United States, or one of the biggest changes, is that the US government went from looking at the world primarily through an economic lens first. National security is always important, but we sort of led with our economy. With the invasion of Ukraine, the world changed so fundamentally overnight. And now almost every major decision the United States, this administration makes, is through the lens of national security. That's why the United States today is involved in something I would have never predicted in my career, which is classic industrial policy. It has failed in every country that's tried it. It's totally uneconomic, and that's why we're subsidizing it to the tune of $750 billion through the CHIPS IRA and other legislation. But it's about securing our supply chains. It's about national security. It's about outcompeting China. And so with all of our structural problems, I think in the short term, we are heading into recession. I think it's going to be a bit of a hard landing. I agree with Mohammed. The Fed's going to actually, I think, on the risk of policy error, over-tighten or stay tight for too tight for too long. But coming out of recession and looking out to next year, and I say this also because in a way it doesn't matter, of course it matters who wins the US election, but whoever wins, whether it's Biden, Trump, or Kamala Harris, you know, they're going to inherit an economy that's literally lifting off into what I think will be the strongest multi-year economic expansion, above average expansion in several decades, and it's a function of how much fiscal has been approved. Again, CHIPS, IRA, and infrastructure, $750 billion, a private sector multiplier effect, $1.5 trillion on top of that. Most of it's in the form of incentives for multinationals to reallocate capex away from Asia and Europe into the US. FDI is going to be a huge driver of this growth. If you believe in AI, take the hype out, but it's still going to be a meaningful driver of growth and productivity. Every major AI company is American. My point is that looking out beyond a short-term recession, we have the best setup for the United States probably in my career. Literally, it means it's dollar supportive. It also means whoever wins the election is going to get lucky. And yes, it is inflationary. So interest rates are going to stay higher, right? I think when the Fed finally pivots to accommodation late next year, we're looking at Fed funds probably around 4.5%. With all of that, I would still bet on the US economy. I think it's going to, relative to anemic Europe, China with their structural problems, some emerging markets look fantastic, but they're not that big or liquid. I think the setup for the US, partly to answer your question, is one of the best looking out to next year, and for about 3 to 5 years, one of the best in my career.
Yeah, I would love to end on that upbeat note, but there's no way we're going to do that. I'm going to talk to you about Taiwan, but before that, I just want to turn back to you, Steve. What Charles sees as industrial policy triggering a revival, many people looking at the US from Asia see as American first protectionism and misallocation of capital and subsidies distorting worldwide productions of things like the whole renewables chain. All of us here have been the beneficiary of globalization, which is now going in reverse, larger than just the China-American. So before I turn to Steve and we talk about Taiwan, let me ask you.
Wait, which Steve?
Other Steve.
Well, the real Steve, please stand up.
How do you see American policies? Do you see them as protectionist and distorting capital allocation and raising costs worldwide as people have an incentive to put everything in the US? And many people say, in addition, because companies have so many subsidies in the US, they have less incentive to innovate. How do you see that whole thing? And then we're going back to Australia, Steve, to talk about Taiwan.
I'm far enough offshore where there's no penalty for what I'm about to say. But I think the U.S. is guilty of extraordinary hypocrisy here. We have been hypercritical of industrial policy, and we've done a terrible job of executing it for decades. The Section 301 trade investigation launched by former Trade Representative Robert Lighthizer under the Trump administration was hugely critical of China as being the ultimate practitioner of industrial policy and using government subsidies to pick winners and losers. What are we doing? We're doing the same thing. And the idea that, Washington bureaucrats are smarter than markets, smarter than capital markets, smarter than entrepreneurs to identify winners and losers has never worked in the United States, and it's not going to work this time. You look at the Great CHIPS Act of a couple of, what was it, 2023, was it passed then? I think it was. 82% of the $52 billion that's going into semiconductors goes into bricks and mortar, constructing new fabs, rather than into the R&D that's required for new and next generation semiconductor chips themselves. It's an example of planning really having, I think, misdirected the government subsidies toward the wrong aspect of an advanced technology business. So, I am hugely critical of this And to your earlier point on the reduced allocation of treasuries by foreign.
Let's not go there. 'Cause
Well, just one point on that. Just foreign reserve managers. These deficits and the industrial policies that are being funded by these deficits are going to require them to invest more in their treasuries. And again, they're going the other way.
Thank you. Steve, I'm going to turn to you now, and let's talk about Taiwan.
You left the easy one to last.
My Chinese friends all believe that Xi Jinping only cares about his own power. And what could jeopardize, the only thing that could jeopardize that absolute power is a failed escalation in Taiwan. And therefore, he has no incentive to do that. Is that something you agree with or no?
I mean, answering this question is akin to how long is a piece of string? I mean, you can ask 100 people and get 110 different opinions. What's going to happen with Taiwan, we don't know. What we do know is that it is the explicit express view of President Xi that it remains unfinished business. So we know that much we do know. Now, what that actually looks like, how that manifests, I think depends on a whole raft of different views, a whole raft of different considerations. Obviously, we are living in a more geopolitically unstable world than we have lived in for quite some time. I think, on any fair assessment, it's probably fair to say the level of geopolitical instability is the highest it's been since the Cold War globally at the moment. Now, does that mean that it is more likely or less likely? You speak to different people, you'll get different views on that. But then there's also other considerations. You saw the way in which the West was able to solidify their position in response to Russia's invasion of Ukraine. You saw, I think, a consensus of action, in particular among the Europeans, which some would argue was in direct contrast to their economic interests at the time. But it was built and predicated around energy security and a need to also send a message about actual geographical security for the Europeans. So, does China sit there and take a message from that? I would argue yes. I mean, ultimately, if I was to say what is the one theme that has been consistent over the past 2 or 3 years from the West with respect to China about Taiwan, it's that the transaction costs of any action there are going to be significantly higher. And fundamentally, if you want to look at trying to dissuade certain activity, the only way you are successful in dissuading certain activity is to show that there'll be a heavy penalty to pay. Now, ultimately, you asked about your friends and their viewpoint. Does that align with that? Well, I guess it does on one level. But this is a calculation that will be determined by effectively one person alone. And so it's very difficult for us as outsiders to really know with any certainty what precisely are the considerations and what precisely is the end result.
Can I address Taiwan?
Please.
Yeah, I just weigh in on Taiwan. So everyone knows I'm pretty hawkish already. In fact, at the AIM summit in London in April, I didn't know you guys were going to put our panel up on YouTube. So I was impressed with how many hits it got and all the bots came out and how the unanimous view in all the comments was how incredibly smart Stephen Roach is and how much more attractive he is actually. So it was really fun to get to see all the comments. But on Taiwan, I would just say—
This came from my family, Charles.
I would say that I would say on Taiwan a couple things. One is what you just referenced, that one of the disincentives or the biggest disincentive for China to not move on the island is risk of failure, right? And that would, therefore the price would be too high. And, that in a way was partly the logic and the explanation of why Putin would not invade Ukraine, right? Literally for months, he was amassing troops, military hardware, blood supply, incinerators on the border, and the vast majority of the world said he would not invade Ukraine. Risk of failure was too high. It was too much. It would be too big of an undertaking, and he did it. We have to also contemplate the same scenario for Taiwan. In the end, if China does nothing, they can threaten for years. That would be the best outcome. But if they decide they do want to take the island, and what worries me the most in this is that our strategy and our collective strategy with the Australians, the Japanese, South Koreans, Philippines, UK, the Indo-Pacific Security Framework, our collective strategy of deterrence, if anything, is incredibly threatening to China. We may provoke them into ultimately trying to take Taiwan. If they do, they would control if they take Taiwan successfully, they will control the entire Taiwan Strait. Just under 50% of the world's trade transits through the Taiwan Strait every year. Secondly, they would control much more of the South China Sea. The United States will never allow that to happen. I'm here to tell you guys, I know it's really hard for everyone to get our heads around. A kinetic war with China is very hard to contemplate, but we're living in a very different world today. The United States is at war with Russia. It's a proxy war, but we are at war. And we would absolutely or will defend Taiwan militarily, given how important it is strategically, not only for us, but for the region. So we have to be prepared for that.
You know, we're out of time. Zach has given us 10 more minutes, but all we've done is just begin to raise all the questions. For somebody like me who moved to Hong Kong, 32 years ago, it's like watching a movie in reverse. And I think it is very hard to end on an upbeat note, but thank you all so much for illuminating all the difficult questions.
Thank you.
Thank you.